are at turning points. And what causes a turning point? Well, it's the imbalance between supply and demand, between buyers and sellers. And that's caused by the big players out there, the institutions.
Al, as we get into this next segment here, continuing this discussion about supply and demand, how the markets actually function. And we talk, and you actually mentioned in the first segment, the institutions, we referenced the smart money. They run this market.
Yeah,
I mean, I think the stat is around 90% of the
That's
actual
correct.
volume is the banks and institutions.
Mhm.
So what does that tell you? What that tells you is we want to trade like them. We're never going to beat the banks. We're never going to beat the institutions. So why don't we join them? That's that old saying, right?
Sure, you can't beat them, join them.
So talk a little bit more about supply and demand, what that might look like, and where are you seeing that activity as well?
Yeah, a number of things I think that are really worth considering here. Number one, if you're going to participate in the markets, you don't want it to be like a one-time thing. You're in one time and maybe you have a benefit and that's it. You want to be able to do this on a consistent basis. So you have to rely on something that happens on a reliable and a repeatable basis. That's how you achieve consistency. And that's what the institutions are doing for us. They're trading every day. You don't have to do that, but they're providing opportunities on a pretty regular basis because of the huge amounts of money that they're putting into or taking out of the market. The great thing for us is that because they're so large, they can't do it all at one time. They have to do it incrementally, whether they're entering or exiting. And we have a strategy, a core strategy, our foundational strategy that really relies on that or is based on that
It's
kind of
designed
activity.
to teach you to identify that, right?
Exactly. So, how valuable would it be for you to use a strategy that allows you to be able to see what, where, and when these banks and institutions are buying and selling? That would give you the opportunity to identify price levels where they're buying or they're selling. And you could actually, in advance, have a position set to take advantage of it. That's what the core strategy is. And again, it's based on something that is reliable and repeatable, which you need for consistency.
Yeah, and you're seeing that on a price chart, correct? So
Correct.
you're essentially, I mean, think of it this way: a price chart. You're essentially reading a story, right?
Every
And
price
trying to
chart,
identify, what could potentially happen next,
right?
but at low risk, high reward, high probability entry points, which is actually at or near a turn in price.
Correct. Yeah, and that's what we find is that almost always those high reward, low risk trades are at turning points. And what causes a turning point? Well, it's the imbalance between supply and demand, between buyers and sellers, and that's caused by the big players out there, the institutions. So fortunately for us, they're kind of telegraphing to us what they do, but it's all on a price chart. You mentioned a story. Every price chart tells a story. And it's a candlestick chart, which is what we teach our students how to read, very much like a radiologist would read an X-ray or an MRI. You can't do that because you're not trained to do it. You can read a price chart if you have the right training because, again, it tells a story. We'd show you how to read that story and how to identify what the institutions are telling us by those in a candlestick chart and a price chart.
Yeah, I mean, think of it this way too. I mean, I'm sure none of us really remember when we were growing up learning how to read. But say you have a child or a grandchild, and they're in their learning process of learning how to read. First few times, they're sounding out the words, they're understanding it. But then, the more and more you do, the quicker you are. You can read very quickly then.
Sure.
And that's how reading a price chart is. You have to watch it, read it, and then hopefully understand that story. And it's based off of facts because the price action on a chart does not lie. And if you understand where that imbalance could potentially be, well, that's where you make your decisions. If you want to start to learn more about how to read that story, how to understand where these banks and institutions could potentially be buying and selling. Now, understanding, Al, that supply and demand is read on a price chart. That's where we're trying to identify that. Now, everybody has a different objective in the financial markets, whether they're looking for income or they're looking to manage or control their wealth. Let's talk about the income side of things. What is the smart money using to create income, maybe an alternative to stock?
Yeah, why do we talk about income and wealth as two different things? It's really because there are different ways of trading for income and different ways of investing for wealth, for your long-term wealth. And I think what really is important then is that if you're going to get education, because that really is where you need to start, getting the proper education to be able to read those charts that we've talked about, that really becomes kind of the timing mechanism. If you can identify where the big banks and institutions are buying and selling, that allows you to kind of time the entry or exit for your individual trades. But then what do you do that with? Is it just stocks or is it mutual funds? No, there are a number of things. You hit on a little bit of them the first part of the show here, but there are assets that the institutions are using on a regular basis for short-term needs, for kind of boosting their bottom line on a short-term basis. Those big banks and institutions are not putting together a portfolio that they hold on to for decades before they look at taking any kind of a profit. What most of the listeners have been put into and talked about by a financial advisor may be that kind of long-term buy and hold strategy where you put together a portfolio and you don't sell anything until you retire. Well, that doesn't help you if you have needs right now. If you have emergencies, if there are things you want to do, maybe you want to buy a new car, do some traveling or things like that. Those are not free. And for a lot of people, they're looking at some additional ways of bringing some capital into their accounts so they have the ability to do some of those things. That means doing something that's more short term. And there are assets that are really ideal for that. The futures market is one. And typically that's probably the shortest term trading vehicle. A lot of people will be into and out of a trade. It could be in a day or a couple of days. That's where you're looking at things that you can trade the stock market. You're looking at what the value of something is going to be worth in the future. It could be the major stock markets, commodities, corn, sugar. Josh has a favorite.
Oh, would that be lean hogs?
That would be lean hogs. Currencies, interest rates, oil, gold, silver, a number of things that you have access to that the big boys, the smart money, they're trading those on a regular basis. How many of you have been taught that you can do that? How many of you know you can do that? Same thing is true with the foreign exchange market, where we're looking at currencies, and you kind of referred to that earlier also.
Well, that's why I mentioned that stuff, to hear it, and then the more people hear it, it's not new anymore. It's just a little bit different.
Right. Yeah. And for most people, you hear things like that, and there's that concern. I understand that. We understand that. You don't know anything about them, so there's going to be a little bit of fear, a little bit of trepidation there. That's why your education, if you're going to choose a source for education, it should provide a number of things. It should provide education on different styles and different asset classes. Short-term trading, for example, swing trading. It could be day trading or swing. Day trading is where you're buying and selling something the same day. Swing trading, maybe you're putting a position together that you're going to hold for a few days or a few weeks or a month or so. Position trading, long-term investing, maybe one or two investments a year. Wealth management, as I mentioned before, that wealth management part, the wealth buildup is different than what you're going to use for your short-term needs. And then also that education should provide kind of the investment theory for stocks, for exchange-traded funds, for options, futures, and Forex, all in one place. So you don't have to go from one location to another to get different education, on different styles or different assets.
Yeah, I like that explanation on kind of what the futures market is. So, I mean, people are probably asking themselves, well, why might I want to utilize the futures market? I mean, think about this. That market is actually open 24 hours per day. So
Right.
that gives the average investor the opportunity to trade in the morning, to trade in the evening. Al was talking about different types of trading. If you want to be a shorter term trader, a lot of people like to trade it in the morning. If you want to be a longer term trader, you can trade in the morning and the evening. It doesn't really matter because it's actually open at that time.
Right.
You dictate that time, but it also allows leverage. You're being more capital efficient that way. And that's what it's all about, is maximizing the use of whatever capital that you have. Al, we covered, I guess, this futures market, which a lot of people like to use as a shorter term strategy, whether it's daily or weekly, whatever that may be. I want to talk a little bit more about that longer term strategy that investors like to use, using the Forex market, but also the options market to be more of a passive investor. This is Josh and Al, investing with confidence. We will be right back.